People tend to lump all these companies into one basket. I mean, they're sort of similar, but they're also very different when you look at the entire spectrum. Is there any specific company that you think we should be watching most closely this week?
Yeah, I think the standout, again, is a slightly uninteresting answer, is Tencent. Not just because it's the biggest, but it's the most diverse, with the biggest barriers to entry. And whilst every company faces external risks, probably its risk profile relative to some of the others is lesser, because it's typically a leader, has strong technology and market leadership in most of its end markets, and that, it's facing less external risks. Compare and contrast with the e-commerce sector, where obviously companies are facing slowdown with the consumer in China and also rising competition for low-cost players. So I think Tencent is a more robust story, driven primarily at the moment by the extreme strength they're seeing on the gaming side.
Shawn, maybe you can chime in here. You have a report saying, can elephants dance again? I'm wondering what that means. Is that these tech giants, certainly, as Robert mentioned, maybe Tencent's a little bit more shielded from the economic side of things, whether it's weak consumer spending and a slowdown in the economy. I know Tencent is the top of your pecking order in terms of tech stocks that you like. Why so?
Well, we have the title, Can Elephant Dance Again? I think that mainly refers to two big elephants, that's Tencent and Alibaba. Because definitely we like Tencent. Tencent is our topic. As Robert says, that seems that it's less impacted by the overall weakness in macroeconomy, and its gaming looks very stable. On the other hand, we recently upgraded Baba, mainly because we think that Baba's management change, we are going to see some result of that, and we are going to see Baba can increase take rate from Taobao and Tmall. So that's why we think that we have buy ratings for both Tencent and Baba. That's why we have the title, Can Elephants Dance Again?
Okay, Shawn, well, I know Baidu is on the other side of that, but let's stick with Tencent, and a question to both of you, Shawn, and maybe you can chime in, Robert, too, on this. Shawn, a big focus from investors, not so much the business for Tencent, but the buybacks. Can we expect the rate of buybacks to continue here for the company?
Yeah, I think so. I think they have enough cash, and especially thinking about that, they have much better performances on gaming this year, and unlike gaming is a high margin business, so I think they have very good cash reserve to support their buyback program, and also I think that buyback seems to be something that's behavior that exists across all China internet companies, and Tencent seems to play the lead. So yeah, we think that the buyback could continue for Tencent.
Robert?
Yes, I have to agree with that. The level of cash generation across the centre is still very healthy, and particularly bearing in mind the valuations across the sector, there is actually scope, I think, for companies to perhaps announce enhanced buybacks at this set of results, assuming they're, hitting numbers. But I think for a company like Tencent in particular, that is, one potential upside risk from where we stand at the moment.
In terms of catalysts then, Robert, what else are you watching out for the sector?
The Tencent story, whereas if you wind the clock back to about 12 months ago, the games business was really suffering from lack of hits and the slowdown in what is ultimately a slowing and saturated market. The story's changed, and it's really very much being driven by games at the moment. So we expect that to continue through the next quarter or so on the back of new gaming releases, and particularly DNF Mobile, which has made all the headlines in recent months. So that momentum should continue. But I think looking more forward, the growth, to be a very sort of obvious point, but the growth momentum and the earnings momentum as the sector is going to all normalise into next year. So obviously we're going into a slowing economy. So whereas Tencent, for example, should deliver, 25 to 30% earnings growth this year, investors should still bear in mind that the earnings growth will normalise next year. 10 to 12% growth appears a reasonable estimate at this point. So to call it a slowdown is perhaps an exaggeration. It's more normalisation once that initial, wave of gaming growth plays through, I think.
Shawn, let me bring you back in. So let's wrap up the topic on the elephant. So Baidu, so Tencent is the top for you, then shortly behind Tencent is Alibaba. Baidu is last, and you say the company is challenged. Tell us why.
Right. I think that's the Baidu's challenge, mainly from the search, like core advertising businesses, because we see Chinese internet users, their their search behaviors are migrating to other vertical platforms, like Douyin, like Xiaohongshu, the Little Red Book, and also WeChat search. So I think these platforms, they have enough like content, and they are ramping up on their like search capability. On the other hand, Baidu is emphasizing on AI, and there are a lot of other AI startups in China. And the problem is that Baidu tries to transfer their search result to more like integrate the AI like summary, but that means that the users will spend less time on Baidu mobile app, because basically people can only read the like summary of the AI like generative results. Then that means that Baidu probably is going to lose some like ad loads. So that's, I think, in terms of the like competitive landscape, and in terms of the challenge brought by AI, that's the two concerns we have currently.
Robert, you've been talking about this as well, that Baidu once was sort of the leader in this whole AI story, and they've kind of lost a bit of momentum now. How do you see China positioned in AI compared to the U.S. now?
Okay, one thing I've said sort of consistently over the last 18 months or so is that the technical barriers to entry on AI on the software side are not particularly high. Whilst, compare and contrast again with hardware and semiconductors, you're trying to produce chips at the cutting edge of physics, so that's incredibly difficult to do. But the fact that there are now several hundred Chinese companies with large language models developed at this point in time, whereas, at the beginning of last year there were close to none, again, just reinforces this point that the technical barrier to entry just isn't there, and that has significant long-term implications on the abilities of these companies not just to break even but turn a profit. So there is a price war in the Chinese large language sector that will continue for the foreseeable future, and again that has implications on the ability for particularly the likes of Alibaba, which strategically has put huge weighting on AI as a potential growth driver, and also again the likes of Baidu. I was really hoping Shawn was going to be really bullish on Baidu so I could try and cut that argument down. But, I think the two of us are in quite strong agreement on that front. Baidu has a very fundamentally challenged outlook.
Right. Shawn, let me ask that question to you then. Why aren't you convinced that AI could change the core business for Baidu just yet? And how are you looking at AI, for example, for these other elephants, for example, as whether that's an asset, a future investment, a revenue enhancer, or simply something nice to have?
I think for Baidu, the AI has two implications. One is for its core search business. I think this is more like a challenge. But unfortunately, I think most of Baidu's like profits coming from high margin advertising search business. On the other hand, that Baidu, I think they have some advantage in autonomous driving, robotaxi. We have seen this kind of reports. But unfortunately, it seems that's still a very far away picture. So at current level, I think that Baidu seems to face more challenge than opportunities in terms of AI. On the other hand, that you ask about the overall picture of AI. So I think that's probably that AI could come in several like phrases. So the first phrase, like current stage, I think it's more about technology advancements in terms of like big language model. We have seen that in the West. But unfortunately, I think due to various reasons, it seems that Chinese internet companies, they don't really want to talk much about that. But on the other hand, that if you compare with like mobile internet, and the second stage, probably it's going to be more about application, about software, about the things like we are going to really see some impact. And then at that stage, we're probably going to see these China internet companies will be more active, because they're better in terms of like data, in terms of application, and in terms of user scenario.
I was going to get your take on the e-commerce space as well. I know Alibaba's the second on your list in terms of top picks, Shawn. How does that compare? I mean, the competitive landscape, we just talked about Colin Huang from PDD now becoming one of the richest men in China now. How does that competition fare now between the likes of Alibaba, JD, and PDD?
We actually downgrade PDD about 2 months ago. So we in that report, we upgrade BABA, but downgrade PDD. I think that's mainly because it seems that we see that PDD is facing some pressure from some other competitors like BABA and Douyin. On the other hand, that we think that PDD's Temu domestic, like overseas business probably is going to lose a little bit more money than we thought. And I think 2 months ago, the consensus number was very high. If you look at like other like sales side analyst estimation, so that's why we said that we see that increasing competitive pressure and we see high consensus number. That's why we downgrade PDD at that time. On the other hand, we also like have a neutral rating for JD. I think mainly because that JD seems that their business model is more emphasizing on like logistic, on like brands, products, on high value products, and this is something seems that to be like less favorable by the Chinese consumer now. So yeah, I think that our pecking order is still above first, and we have PDD and JD like see more challenges.
Right, and it's worth noting, Shawn, that the ratings, of course, also reflect the short-term movement in stocks, right, and what might outperform from here short-term. But tell me this, or riddle me this: who do you think among the three will have the biggest e-commerce business in 5 years' time?
In 5 years' time. I think in 5 years' time, because I think that currently that BABA still has, I think probably is still going to be BABA, but I think PDD is going to grow even faster than like other competitors. I think in 5 years, our estimation is that PDD's GMV will be close to BABA, but still like a little bit like, but that BABA is still going to be the largest player in China e-commerce.